The idea of a bear trap is a real one, and it happens all the time. Everybody's scared right now because of the bad economic data, crypto is pulling back, and it feels like a rug, right? But this is real. We could be pulling back further and absolutely going incredibly towards the end of the year in 2026 as well. Welcome back to the channel. Hope you're doing well. And let's have a look at the one place where you need to start to really understand the bigger picture here. So what we have for the first time in a very, very, very long time is a decline in Bitcoin dominance. I marked this out for you between previous cycles and this cycle we're in, guys. And you can clearly see that we've had a massive drop in the past from the top, 60% or even more. We had 34% straight drop. And right now we are anticipating around 22% drop. But we already got like an 11% Bitcoin dominance decline whilst the price of Bitcoin and crypto comes down. This is really, really super encouraging, right? I don't mean to be rude, but wake the F up, because again, unless you haven't really looked into the market as a whole, then your thinking is definitely going to be in isolation. Now, I have done several posts in the VIP community that explain all of this. Something major is flying under the radar, and the reverse repo facility is almost empty. The Fed's RRP, one sitting at $2.2 trillion back in the peak 2022 when QT kicked in, is now just down to $38 billion. That's a good sign. Why is that a good sign? Because when liquidity comes into the market, the Fed, obviously, the account gets drained, the Fed pivots and money gets printed, the cost of borrowing comes down, more money is lent out to households, and of course, that extra money then is a risk-on environment. You must always remember, regardless of what's going on right now, do your future projections. We've got a president, and I'll talk about him, with all of the positive aspects of the bull market: stablecoin adoption, the dollar supremacy, the de-dollarization versus stablecoin, Scott Besson. I cover all of these things. Now, of course, with all of the bullish aspects, you must also understand that there are serious macroeconomic things going on. For example, the PPI that we just had was a real problem. And clearly, right now, US businesses are currently eating most of the incremental costs from the higher tariffs. And of course, these are headwinds for profit margin. This is not coming from me, reported by a Goldman Sachs analyst, of course. And most people don't actually even know what the producer price index tracks. And it's a price of index of all producers and what they receive from their goods and services. Think of it as a wholesale inflation, the cost before they reach the households, whereas the CPI is the consumer price index. Now, rising PPI is basically cost building upstream. Eventually, those costs filter down. They get passed down to the customers. Remember Jerome Powell? We need to see inflation numbers, of course, show up, and we need to see the tariffs show up in the data. A leading signal for inflation and metric for the Federal Reserve. Two mandates: job numbers or employment in general, and of course, inflation. This is why the second one is really bad in terms of inflation, because we know the job market is going to further break down in the winter months. That is absolutely going to be wild. So now the Fed has a balancing act, okay? So the last reading, of course, was specific areas of the economy that saw larger inflation gains. One, manufacturing. I guess they're not going to bring manufacturing to America anytime soon. A hot PPI hints at CPI trend may get higher too in the coming months. Fed may cut delays. Absolutely not. Right now, as of the time of this recording, that still stands at 83.2%, meaning that the Fed is 83.2% likely, as the consensus goes, to cut rates. Now, the kind of rates you're looking for, somebody asked me today in the Discord or the VIP group whether I expected this to be 50. This is going to be basic 25 basis points, and December is going to get another 25 basis points. Then we spill into 2026. Now, this is why I think the cycle could go longer, because many of these upside legislations, Clarity Act comes in October, Fed pivot comes in September for quantitative easing, or maybe they delay that for a little bit. But be prepared for 2026, guys. You know, don't just sit on your laurels thinking that you should be out by Christmas. If the opportunity presents itself, which I think it will, some cryptocurrencies will pump. But this is going to be an extended one, in my opinion. I don't think we go up and down just like we did in the last cycle. So this is why you should be optimistic. Bitcoin dominance in its bearish form for well over 3 years, nearly 4 years now. We've had an extensive Bitcoin dominance run, and this is dropping and dropped out of the upward channel, which was always a bearish pattern at some point. That is a confirmation right there. Now, how far do we stretch this down to get our bull market this time round? So the headlines, in terms of the macro data, I've been saying it for months now, guys, they'll try and trap us in August, September, thinking the bull market is over, and then kapam, things are going to go absolutely parabolic. Now, if you Google alt season, it just literally did a little reverse. Interest over time in the United States, the words alt season has dramatically dropped in the last 2 weeks. This is absolutely in line where most people don't understand. Of course, the Fed has to. There has to be a end of quantitative tightening. The inflation makes it very complicated. So the reason I'm actually saying this, and I'm showing you what I'm actually putting down in the VIP, join our VIP so you could actually get this in real time. But that shows you we could acquire assets cheap. Assets are cheap right now. If we get reversal, it will be cheaper. Forget your emotions. Go with your macro instinct. Understand that these things happen in a market, and as and when they happen, you take full advantage. Now, coming back to, let me just have a look. So we covered Bitcoin dominance, which is absolutely tearing down. The other chart that I wanted to talk about is the total 2. Somewhat rebounded, but we are still in a position of resistance here in December and here as of the time of recording this video. As the total 2. The total 2 is going to determine whether we proceed or whether we pull back as an entire market right down to these levels that we got, which is well below $1 trillion. I think we bottomed at $830 billion. Okay, so that's something to watch. On the daily, it is. On the weekly, it is absolutely at the top. So as and when we get reversal of that, that just adds further confluence into my thinking. Whereas the total 3 right now is also in an area of resistance on the weekly. Okay, so total 2, I mean, these are good weekly green candles. We just want to beat that resistance for a continuation. And if we zoom down to the daily, you get a much better picture of a rejection of the total cryptocurrency market cap. So do we expect this to dip below $1 billion? Potentially, because you could see here, that's where massive amount of support sits for the total 3. So guys, there's a lot more information. Of course, wanted to tell you, of course, the total alpha. We're watching liquidities, but here's another positive thing about stablecoins, treasuries, the US dollar, the fight for supremacy. Again, this is a post that I reported, and most kind of people don't understand who Scott Besson is. This is a former financier managing billions of dollars of the Soros fund management. Later, a key founding Key Square Group, of course. He then joined the economic advisory team of Trump. And of course, right now, he is the Treasury Secretary. And the big thing here is a proposal which is unconventional yet deeply strategic, use stablecoins to help finance America's ballooning debt. And this guy is literally that's massive for stablecoins. In terms of mind share, right now, stablecoins are up there with anything else in crypto. It's up there with AI in terms of searches. So this is the foundational layer of crypto. Stablecoins do well, regulations, dollar supremacy is assured going into the next century, guys. This stuff is, you couldn't make this up. This is a financial model that cracks America's worsening debt crisis. Of course, 37 trillion is no mean feat, and it depends on what an administration to administration does in terms of the policy. Could Trump achieve all of this in 4 years? Well, it's just started. So Besant's plan is the most bullish for crypto, and stablecoins are the way in which America is going to reign supreme. Laws like Stablecoin Act, the Genius Act, the Clarity Act, all of this means eventually one-to-one reserve holds for the US dollar. Now, in his vision, stablecoins minted worldwide become a new source of US government financing instead of relying on a handful foreign creditors, i.e. buying US debt. Millions of global users will be indirectly funding US deficit. And that is to battle the de-dollarization of the American economy, or global economy, actually. So that's very important, guys. This is all coming to fruition towards the end of the year and in October, in line with my 90-day plan, as I expect markets to start melting upwards. And clearly that's going to be massive. So stay patient. Select your core assets that you buy. You buy Bitcoin regardless of whether you buy, I don't know, you buy SUI, you DCA into whatever core you have. Keep believing that regardless of the price action short term, and in the long term, that will serve you. In terms of your beta plays, your risk on 100x altcoins, just be strategic with it. You know, just if they're dirt cheap right now and they're solid projects with working teams, they will catch fire at some point. But guys, it's all coming together. Economy is getting worse. We don't want inflation to get worse because that means the Fed delays producing more money into circulation. But eventually, that all depends on how the tariffs actually leave the current public discourse. And when we start to get to those bullish winter months, whether we go into a top cycle this year, but most likely now I'm leading towards 2026, guys. Let me know what you think in the comments. If you enjoyed today's video, kindly give me a like, smash it, and of course, share the content, because I'm sure this is stuff that's not being shared by any other small YouTuber out there. So a lot of research goes into it. And I'd appreciate if you show me some love back. Sorry, I haven't spoken about specific tokens, but listen, core means you are buying the Rolls Royce, in your opinion, to the point where you like, okay, I want to have, I don't know, 20 Bitensa towels, 10,000 SUI, whatever your target is, get to your target, get rid of your emotion, and this space is going to go wild. But in the meantime, choppy waters. All right, guys. I hope you liked the video. Take care. I'll see you on the next one.